Now, so we've discussed the first four topics. We are moving into the fifth one, which is reading the option chain. Um, you know how to look at the diagrams. You know how to which buttons to hit to buy and sell the options. Now let's look at the expiration cycles and where does that take you. Just a little bit of a note here. We are running a free trading cohort on October 4th at 10 a.m. and I'm discussing from basic stuff to actually some intermediate strategy, which is we're only going into one strategy so that we don't get overwhelmed by a lot of jargons here. So if you want to look at the previous one that we did, the first one, which covers quite a few strategies but not in detail, go onto the YouTube channel and then take a look there. Um, and then this one, the YouTube channel, obviously you're on it if you're watching this. So take a look at the OPSS video, the first one. And here we will just dive into credit spreads. I just want to make sure when you finish this, it's a free one, 1 hour, 30 minutes. When you finish this lesson or the session, you were able to put a position on. Go sign up here and watch our other videos. Anyway, next one. Oh yeah, I'm trying to cover reading option chains. Again, let's stick to the same underlying asset, Apple. Easier one. So I have when you open one of these, make sure you have all the strikes. I don't like to see 14, 12, 10. I like to see all of them. So select this to all, the middle part, and then it shows how much volume that the stock is trading. And then these are the option cycles, weeklies and then monthlies. The gray ones are monthlies. Now the important thing here is to look at the expected move. Now this expected move is based out of the volatility that is trading at right now. So based on the current vol, which we can also check in our charts. So let's go into the charts. The bottom part of my chart is the vol section. Yeah, so the vol was up October last year. This is a 1 year chart, so I always leave it at 1 year. Is it 1 year? Yes, it goes back to September last year. But this is weekly, so I don't like weeklies. I look at 1 year, 1 day. That's my go-to. It's a right or right top right kind of session in Apple since May. So volatility is around 30. If I have to draw a line again, take an average, it's slightly above average. This would be my average here, 23. It's currently at 25. So not a bad time to sell something here. It's down. Volatility has ticked up a little bit. How to read this chain? So what this chain is showing you is what is the expected move based on the number of days that are left in the cycle and the volatility that's there. So at vol, 25%, 23%, 23%, average 23%, right, throughout the cycles. This is the expected move. Like in the next 2 days, if I'm looking at this cycle, the next 2 days, the stock is supposed to move plus minus $3.50. So it can go up by 350, it can come down by 350. That's what this is showing. In this cycle, again based on this vol, and I think this is the at the money vol for this expiration. So at each expiration, at the money vol is this. I think this is at the money vol. We can go and check. For example, 23. The one with 23 days left has 23.23. At the money is 225. We'll have to bring up Vega. Vega is 22. There it is. So I'm looking at Vega 22. So it is at the money vol. It shows you at the money vol. Again, don't quote me on it. I think this is at the money vol. But yeah, 23.3, 23.23 for this cycle. And then the stock is supposed to move plus minus $10. And these are dynamic numbers. So always understand and remember, these are dynamic numbers. When things change, this thing will completely change. So right now, if you were to take a position, keep in mind that this is your expected move. 1 standard deviation expected move. This is not 2 standard deviation. This is 1 standard deviation. Plus minus $10 based on current fall. That's how you look at the option chain. Set up some. I actually don't keep the net change one. I don't like this, so I take this one out. Net change is gone for me. The rest are fine. 1, 2, 3, 4, 5, 6. I have 6 columns. Bid and ask come as default, so leave them there. It's a good way to check liquidity on everything. So option chain. First of all, set this up. This is what has worked for me. It may not work for you, so everyone to their own thing. Bring in whatever you think that is going to work for you. The yellow ones are weeklies. It shows you here. The gray one is monthlies. If you go down, if you like, unselect this, you can go into these monthly cycles. Look at this, 15th of November, next one. It's always third Friday of the month. So 20th of December, they're all the monthlies, and then they open up weeklies when it gets closer to that expiration. So the reason you don't see them here is because it's too far out. Once it gets closer, they'll open up the weekly ones as well. The current monthly one is 23 days out. Still not enough for me if I have to sell anything here. So I would have chosen the 15th of November one. Next thing is you're looking at singles. So you can look at other strategies here. You can go look at the verticals. And I think it shows you the vertical spreads like this. I don't like this. Too much gibberish going on. Too difficult for me. So I don't look at it. I don't look at it like that. I look at it as singles. Again, I've shown you the layout. You can change your layout. There are some preset ones that you can choose. Implied vol with implied vol, open interest and everything. Do whatever works for you. This is the put side on the right hand side. So the shaded parts are the in the money ones. So you are in the money here. You are in the money on the call side on the left side here. And then the unshaded parts are the out of the money ones. So that's how you look at the option cycle. In the middle here is your expiration date, 18th of October, which comes from here. The date comes from here. All of these dates here, they come from there. The deltas we've talked about, theta, we've talked about vega, and then the volume. Again, volume and open interest are the two of the most important things. Keep that in mind. Don't go too. So the sweet spot. What is the sweet spot? If I were to buy, I would stay here, around this mark, anywhere here, 50 to 60 deltas. If I were to sell, I would sell here. This is my sweet spot to sell. And then if I were to sell the call side, I'll sell here. This whole thing. I wouldn't go too far close to the money or too far any further out of the money, because then you don't collect enough credit. Anyway, thank you. I'll see you in the next one.